Well, welcome everyone to this episode. We're going to talk about a lot of different things here as we get going. But the main thing about this, or what our kind of theme is for this, if you will, is the economic shift ahead and what Tampa Bay needs to know. So we've got some very special guests here with us that we're going to talk about, again, all different aspects of what's going on in the Tampa Bay market, from finance to lending to real estate. We got it all covered here for you. So I want to go around the room. I want to have everyone introduce themselves, tell us what you do, where you're from, and we'll just kind of pick it up from there and get the conversation going. Does that sound good?
Yeah,
Perfect.
let's do it.
All right, Christopher, let's start with
Hello.
you.
Thank you for having me. It's Chris Smith. I'm originally from Connecticut, but I moved down to Tampa 20 years ago. I've been managing mortgage loan production offices since 1997. I'm happy to be here.
Awesome.
Well, I'm Barclay Harless. I am a senior vice president at the Bank of Tampa. I live in St. Pete and Kenwood. I'm from Florida. And just a small disclaimer, any opinions, especially the crazy ones, are my own and not of those of the bank.
Nice call.
Thank you. Yeah.
All right, Lisa.
Leisa Erickson. I actually own Engel and Völkers in downtown St. Pete and also at St. Pete Beach. I also own a property management company. And my husband owns a general contracting company. So anything related to real estate, I can pretty much have an opinion about whether it's right or wrong. We'll figure that out as we go. But anyway, I don't have to have any disclaimers because I own them. So thank God. Nobody can arrest me or send me to compliance, I don't think. Anyway.
Awesome. And I'm Austin Barton. I'm VP of Marketing. I work with Lisa for Engel and Völkers. The first thing I want to talk about, because I think it's the most relevant, is going to be the rate cuts we keep hearing about. Because when I see them, I don't necessarily see maybe the significance of this recent cut. But I could be wrong because, again, I don't really understand like you guys understand. So, Chris, I want to hear from you first. What is going on with the rate cuts that we just got, and how is it affecting people currently?
So the Feds did announce a quarter-point rate cut, but ironically, 30-year fixed rates went up a tick. And the 30-year fixed rates typically follow, we were speaking about this earlier, follow the 10-year Treasury note. Where the Fed's fund rate is an overnight funds rate that they cut. I think we have seen a rate drop in the last, it's been kind of, 2 ticks down, 1 tick up, 2 ticks down. So we have seen a general overall trend of a rate drop, but everybody, it's big news when the Feds are going to drop the rate. And generally speaking, I do think the rates kind of follow each other in tandem, but we did see a tiny little bit of an increase in rates after the Feds cut the.
Doesn't that seem oxymoronic?
It does.
How the general public, right, thinks that they're going to hear a rate decrease. For us in the business, we've been waiting for this for such a long time. And you just heard it. The rates went up. Doesn't that seem very strange?
Yes, it does. But cut, and you said 0.25%?
The Fed fund rate, yeah.
Is that even significant? Because that sounds like nothing to me. Again, not knowing. Is that significant? Is that something to be excited about?
Well, so it does affect the rate on your credit cards, home equity loans that are tied to variable rates. So not a huge significance. It might, depend on the balance of whatever. It's usually that's tied to short-term debt, revolving debt, which would be home equity loans, credit cards. But no, pretty insignificant.
Yeah, that's what I kind of thought. So Lisa, do you think this will affect the market at all from your perspective?
Well, for us, that buy and sell properties or help people buy and sell properties. I think we've been waiting for a reprieve, from rates. So we were at the height, what were we at 8%, something like that, not too terribly long ago. So, we are seeing a decrease in general, which the quarter point will help us as a long-term sort of like strategy probably. But in the interim, we're still seeing rates that I think are much better than they have been. I think some people don't really realize that. So what are they at right now today, Chris?
High 6s in your government loans, FHA, VA, high 5s, mid 5s.
See, that's very attractive. That's very attractive.
Such a long time for them to drop from where they were in the high 7s, low 8. Yeah, we hit a peak of 8.
Yeah, I mean that for me that's very meaningful. Speaking of that, you said FHA, and I want to talk about that for a second because almost anybody that I would mention FHA to, whether they've bought a property or not, they always think that that's a first-time home buyer loan. they think it's automatically that connection point. Can you explain that, since you mentioned it, what it actually is?
Yeah, so FHA, you are correct. There is an idea or an impression out there that FHA is only for first-time home buyers, but FHA is really designed for anybody that has a low down payment because it's always going to come with PMI, but also a FICO score below 700.
So FICO score is just for the
Credit
people that
score.
might be looking at your credit score. There's people look at FICO. There's different entities that report on credit, but so what's the credit threshold
So
on
I would
that?
say in the low 700s, but I have a loan I locked yesterday where the customer had a 710 FICO and they were putting down 5%, and the actual rate was so much lower FHA that their payment because you still have PMI. PMI is private mortgage insurance. For those of you that don't know, anytime you put down less than 20% down payment on a house, you'll pay PMI, either both conventional and FHA. But because the rate was so much lower, it gave them a lower monthly payment FHA than it did with a conventional loan. Even the PMI conventional was going to be a little bit lower, but the principal and interest payment with the lower rate gave them a lower overall monthly payment FHA.
Yeah. So, I don't want to geek out too hard on interest rates.
Let's do it. Let's do it.
So we're trying to keep it at a high level, which we can get down in the weeds very quickly. So let's turn, if we could, just at a high level. So you're in the lending world from the residential side, right? Investment side, investment properties, things like that. Barclay, you're in a completely different world. You are in the commercial banking world, right?
That's correct.
So talk to me, Chris, Austin, about what you're experiencing based on market liquidity and all the things that people are looking for from commercial lending.
Well, people looking for yield, right? That's like what they're always trying to do. I think, the way I look at interest rates is what's the cost of money? Is if money was a commodity like any of the others, and they were artificially pretty low for a long time. And also, what rate are we talking about, right? So to put it into very simple terms, let's say 5 years ago, when rates were exceptionally low after COVID, it was like 2.5%, let's say. At that point, most business loan rates were around 4%. Like a good low rate was 4%. So there was a 150 basis point difference. Today, they're equal. And in some cases, the business rates can be lower, business commercial loans, right? And so it's always about relativity. Like at one point, you had to really pay to get a business loan versus residential. And today there's parity. So
like what, give us an example, like right now, what it was a commercial rate looking like, right?
I mean,
right
they would be in
market?
the range of like the 5 to 7%, most of them, depending upon the risk. And if it's a construction deal, if it's a line of credit to an operating business or something like that. But, that's sort of the upper sixes are kind of halfway there. So you have some, commercial products that are lower than residential, which if you think from risk, someone's house is like the least risky thing you could be lending for, right? People will pay that. They have to live somewhere. And a commercial, product is typically a little bit higher risk, but it's not necessarily the case right now. It's kind of weird.
That's strange. So what are you experiencing in terms of volume? Like, is your Bank of Tampa, in a lending position right now? I mean, I know markets can change a little bit in terms of like your portfolio mix. I mean, what are you guys experiencing right now?
Absolutely. And I'll talk about just banking in general in Tampa Bay. There's a lot of lending activity still happening because you have a lot of companies who are relocating to the area still, that have maybe one or two of the executives moved here after COVID because they had that ability to, and now they want to move the rest of the team down. Typically the problem there is office space. We don't have a lot of office space, specifically here in St. Pete. Water Street in Tampa, added I don't know how many, hundreds of thousands of square feet, but we had a crane fall and knocked out 10% of St. Pete's office space. That's not much.
Wow.
Right?
Wow. I didn't realize that was 10% of the office space.
It was 10% of the downtown office space wiped out with one crane falling during
That
a
is
hurricane.
crazy.
Yeah. But what you're seeing in general is two things. You're seeing generational change because of demographics. People who built companies up are selling it to their successors. Sometimes those are not relatives, sometimes they are. And then you're seeing sort of a similar thing with wealth. Folks are passing away, and then that wealth comes down to younger people, and those people want to have their own banker. They don't really necessarily want to deal with dad's banker. And so in the industry in general, you're seeing relationships become much more important, I think, than they were a handful of years ago in general.
You know what? I think that's good to hear. Personally, I mean, if you think about our generation, people that, kind of we know, grew up with, I know that my mother's philosophy, as an example, had a completely different philosophy of money and money management. But I think relationships in a technology-based age that we exist in, I think to hear you say that people are interested in relationships, I think is very encouraging, actually, because I've always believed that, right? You and I have known each other for a very long time. We were fortunate enough to do a lot of business together through the years. And for that, we value that relationship. Chris and I have a relationship in terms of like the partnerships that we can make happen for ourselves or for our clients. So I love that. I think that's really good.
Yeah, I think, this is just my own little crazy theory, but as so many more things happen online and social media, when something breaks in your house, if somebody says, hey, this is my AC guy, I know him, you're automatically like, I much rather would use that person. I know they're not going to scam me there because they know Joe or whatever it is. And I know it'll get done correctly. And that person, that you get that instant familiarity. And so I think relationships in general are becoming a little bit more important as we become less connected, even though we're more connected, if that makes sense. Sort of like rates going up and then going down at the same time. Yeah.
How do you keep track and manage all of these relationships with all these different people?
Well, there's obviously software that can help with that, especially if you have a poor memory like I do. Really, it's just it's being out in the community where you're going to encounter people a lot. It's being on social media. I think LinkedIn is probably the one form of social media where you can actually get decent news about what's going on, or property was sold, something like that, where you get instant market intel. But really just old fashioned, being out in the community and hey, I know a person, and you can phone a friend. Yeah, that's great.
The biggest thing is to answer your phone. Work with agents where loan officers don't answer their phone. I'm not sure if it was a transaction we were on together, but we were trying to get over the listing agent to have the appraiser was trying to set an appointment, and the listing agent or mailbox was full, couldn't take a message. So I had to text her and it's like, hey, we're trying to get a hold of you to schedule this appraisal. But I agree with you. I think sometimes it's lost as, the older generation. A lot of it's on social media and Instagram and TikTok. And I tell people if I'm awake, I answer my phone.
Yeah, and I think that's that work culture that we have. We really don't turn off these days. But if I could interject about what you're saying, because I think this is part and parcel to what I see happening, because we deal with a lot of people from a lot of different places. So people that are relocating here, they might not know anyone from a trade base. I wish that they would call us more frequently. I can't tell you how many times that I've acquired a client, and I've had it happen several times in the last month, where they've hired somebody that they did a Google review on, or they looked and said, oh, they have a good review, when in fact, complete problems persist for that client. And so, if they would have just called somebody like myself or you guys for a referral for some trade, they would have not spent literally thousands of dollars to continue to try to fix something that actually wasn't fixing anything. It's really sad to see, but I think they don't have that sort of like push to say, I'm going to call somebody and verify that. They just look at a review, which doesn't always tell the true story. So, if you think about your role in commercial lending and what's going on, let's go back for, like you said, banks for lending. That's good. What kind of projects do you see the Tampa Bay market sort of emerging with? What's happening here?
Well, I'm a St. Pete guy. We're on the tip of a peninsula. They're not making any land anymore here, so you have to build. And there's a lot of construction projects that are happening, both residential and commercial. You see a lot of 1031 exchanges. So you're seeing people using the tax laws that are out there to their advantage. And so I am not a 1031 expert by any means, but you have a limited amount of time when you sell a building that has that you used a 1031 to purchase. And so you have to go out and find another one, and you're kind of in the hunt for hopefully with a good, agent that's connected in the Bay. And so we see a lot of that. You see a lot of doctors purchasing practices. So they're out of med school, dentist school, and they, worked for somebody else. Now they want to purchase their practice because sometimes that person's retiring. It's really, the standard things you would think of, but I think particularly in St. Pete, there's a lot more construction projects and they're hard to get financed because it's a morphing piece of collateral by definition. And there's just a lot of stuff since COVID that's happened with insurance, material costs, et cetera. So those deals have become harder to pencil. And I think that's why having a relationship with the bank that's a value on both sides, that can really come into play, as opposed to, just going anywhere.
Especially a local bank.
Right.
Yeah, I mean, I'll give a plug for the bank. I mean, you're with Bank of Tampa. I've banked with Bank of Tampa for, I don't even know, probably going on 15 years. And, I think from a lending perspective, you guys have a really interesting degree of freedom that I don't often see in other banks. So if you want to talk to anybody about commercial lending, I definitely recommend that they do call you, because I think that the idea and the imagination of like what you can actually make happen in this city, and if you're local, and tell me if this is true or not, because I've heard this. Maybe you can't comment. I don't know. I'm local, so I don't have any kind of issues with this, but I've brought some people to the bank that weren't local, and they were like, "Hey, when you're local, when you're here, call us." Is that still the case for the bank?
It depends on a bank's credit policy. So it'll say in there, these are the counties we do business in. These are the states we do business in. What I'll say was most banks, if you live here and the bank has a presence here and you're trying to buy like a second home elsewhere, typically most banks can follow their clients in that way, right? And it goes back to the relationship. But if it's just somebody who's from outside of your market trying to come in and get lending, I think any of us would be a little bit suspicious. Like, why are they following? Why is there not a local presence of wherever they're at? And it really depends on the credit policy of the banks. What I tell people is banks are kind of like restaurants, right? Like you have an Italian restaurant, you have a sushi restaurant, you have some, I will give Tampa a plug. Tampa's got some great restaurants. But each of the restaurants has a different owner, a different chef, a different skill set, different service sometimes. And so banks are the same way. I'll often hear people say, "Oh, I can't get approved for lending. I had X, Y, and Z happen." And it's like, well, that was that bank who dealt with you, and that was their policy or their decision at that time. There may have been several years that have passed since then. And so, if you're talking to a local bank, if you're talking to a regional bank, you're probably going to get different answers. Does that make sense?
Yeah, it does. It does. And, I think about business in general and operating here in this market. So many people that I speak with, and I say, "Hey, where do you bank?" And I can get a lot of different answers, right? And I won't say any names. But some of these banks, I know you're not going to get anything done in it. I mean, they're just too large. They're national in scope. If you have a prayer to get anything commercially lent to you or any commercial line of credit, that's just not really going to be easily done.
Yeah.
And so if I could just, for anybody who's watching, say, look, if you want to create a relationship, with banking, you got to really think about some of the local and regional players, because they have the ability to literally sit down with you and talk to you. And I think it's such an important component of how we can do business here, and we can, continue to collaborate and do more together. So I just encourage you, if you're banking with some of these larger banks, you probably don't have a lot of hope that you can get money lent to you, but there's a lot of banks that can work with you, but you just got to be picky and choosy, that basically on your restaurant style. Yeah. So I don't think a lot of people probably understand that. So, but I think it's a great analogy.
I think you need to go. It's like with anything. It's like with law firms, right? Large, gigantic law firms it's a numbers game. Every month they've got to get so many settlements, right? And so if you're a client there, and you're being told, let's settle, is that because you should settle to get the most amount of money? Or is it because that attorney needs to meet his numbers this month, right?
Yeah.
Mhm.
And so, I mean, I would be curious, honestly, about my stereotype on the 30-year fixed rate mortgage is that it's just very, it's so regulated that there's not a lot of wiggle room. But I imagine there is.
Well, it's traded like a commodity. I mean, it's the paper is sold, and I would actually give a plug to a small bank like Bank of Tampa, or not a small bank, but a regional bank. 'Cause I know that we've had clients that have gone to, some credit unions that, they're not selling their paper into mortgage-backed security pools. So we've had some customers come to us with, terms that, we can't come close to, or writing loans that we couldn't write. And, when it's a little smaller, more local regional bank, they're going to have a credit policy and a chief credit lending officer that might make a decision that someone that's banked with a bank for, their family and generations have banked with them, and they know more about the family and the business and those people. But then, we are more, we are a big, CMG is a big firm, but we sell all of our paper, the majority of it, into mortgage-backed security pools. So we have, now there is a lot of flexibility between, when you talk about the 30-year fixed rate, you have online internet lenders out there that, I tell people, the lower the rate, the lower the margin. So the less revenue they're generating. So that means, generally speaking, they're going to cut corners somewhere. Their loan officer is not very good. Their servicing, their underwriting, their closer, their funder. Because again, it's, if your rate's 6% flat and we're 6.5, well, that half a point, amounts to revenue to our company. And that means we can close fast. We have access to a lot of different products and programs that some of these online lenders don't. A lot of the bigger lenders don't offer the down payment assistance, which is important in today's market. The Florida Bond Loan, Hometown Heroes. So we're kind of small and local, my branch, but part of a bigger organization. But you will see wide variations in a 30-year fixed rate. A lot of times people just go online, like you mentioned earlier. They just go right online and they see this rate, and they're like, "Well, I was online and I saw this rate at 5.875. Why are you quoting me 6.5?" I'm like, "Well, do you think they're going to advertise their absolute lowest rate they can offer, or probably a more realistic rate that what your average consumer?" And then you read the fine print and it's 20% down, which a lot of, unless people have saved a really long time or get a gift or something, most transactions in your first time home buyer space is not 20% down. So, but yeah, we do see wide variations, and I think it's a volume play, but they're online lenders, no service. You're not, getting a pre-qual on a Sunday afternoon at 5:00. But yeah, there's definitely a pretty big swing in interest. Not, someone's not offering 4 and we're 6.5, but we could see 3/8, half a point sometimes from what people might see online.
And I think that's, like, people do try to look at rates as commodity because they have to live with that for a 30-year term. The thing that I would suggest is, if you don't pay attention to the type of lender that you're working with, they can lose your money. And people don't believe that can really happen. But I have many instances over the work that we've done for 13 years of bad lenders losing people's money. It's unbelievable what can happen, and what strife can get created in the transaction. Buying a property is one of the most stressful things
Very much.
one can go through. You just bought a property recently, so
I just did. Yes, and I can plug CMG, who we used, a colleague of yours, and it was a great experience, and Leisa helped tremendously on that end too, getting us a great deal and what we needed. So kudos to you both.
yeah. But I mean, if you think about the stress load of just having a great person modeling the transaction and taking care of you, that is instrumental. But when you don't have that, you've had it. So you can see the good part of it.
Yeah.
When you don't have it and you have things that are going upside down and you have risk related to maybe your $10,000, your $100,000 escrow, and you've got people that aren't performing or don't care, that is really stressful.
That'll make you irate. Yes.
Yeah. Right. And that just doesn't need to happen. So I think people really need to pay attention to the quality of lenders. So if you were to say, hey, if you're going to evaluate a quality lender, what are the things that would be important that a buyer should ask a lender that would identify, oh, if this is going to go well or this is not going to go well?
I mean, I believe that experience matters, but I also believe that, everybody is a little bit different. And I think everybody has different buying habits. I think a lot of it is just when you have a conversation with a realtor, with a banker, I think a lot of it is how well did that conversation go? Do you feel comfortable with that person? Do they sound like they know what they're talking about? Do they sound like this is someone okay? They seem like they have experience. They answered all my questions correctly, or I got a good feeling from that person. And just, I think with the lender having a good real estate agent, we've worked together. And I think it's all about how well you communicate, how well you present yourself in terms of being an expert in your field. I know the transactions we've been together on, a good real estate agent, a bad real estate agent could lose a buyer a lot of money as well if they don't write in, financing contingency, inspection contingency, recommending them to a proper home inspector. If there's a roof issue, being able to recommend them to someone that can, give a good read on the roof. So, but I think from a lender perspective, I think experience means a lot. The ability to offer obviously a competitive rate. You had mentioned earlier, I don't think rate is the most important aspect of a transaction. If it's a big difference, like I said, 6.5 to 4, but we're not seeing that big of a delta between rates. But I think it's comfort level, knowledge, experience. And, I've had the exact same conversation with some people, and then they talk to another lender and they feel a little bit more comfortable with them. And, but I do believe the number one factor for me is experience, reputation, and obviously being recommended from, someone that they know or have had a good experience with.
So what's the red flag? Like you said, oh, you see that? Oh, but better walk
If
away
they
from
tell
that.
you what you want to hear, I've had so many conversations with customers that have come to me and I said, now's not a good time to refinance, or, I'm working with my local bank and they're offering me, 6% with no points. And I just tell them, like, that's a great deal. And if you refer to them and you're just getting a second opinion, but I don't, my reputation's worth more to try and like win the sale or win the deal. And I've had customers say to me, actually, it happened just recently on a home equity line of credit. We're not strong in that space, but a customer I've done multiple loans with was getting one from a credit union up in Connecticut. And he came to me and he said, look, this is the deal I'm getting. And I said, they might take a little bit longer, but you're in no rush. You check all the boxes and that's who you should go with. And he was appreciative of that. So I think a warning sign would be, I think all of us, or a lot of people can smell like a, slick talker, someone who's just trying to sell you and tell you what you want to hear versus kind of really listening to, what are their concerns? What's their experience level of buying, someone who's bought 10 houses and, they're buying an investment property or a second home, probably is going to have a little bit more experience. And so, they probably are a little bit more savvy and will speak to that level. I usually ask them what's your experience level in buying and selling homes, and I'll stay on the phone with you as long as necessary. And some people are just quick and to the point and you can tell they have experience. And some people, we'll talk to them every day going up to the closing, which is fine. That's what we're here for. So I think comfort, experience, it's really how you feel when you hang up with that person or you finish a meeting with them.
You feel good or bad. Yeah. I guess, Barclay. What do people need to know, like, about commercial lending? Like, if you want to get a business purchased, let's use that as an example, because I see that happening as well. If you have a legacy, sort of like family business, and you say, I want to purchase that. I want to get off my 9 to 5, and I want to basically have a business that is already running. What is your advice to people that might want to do that? Because I think there's probably a lot of people that would consider doing that.
Well, the great news is that having a conversation with the banker is free. So you don't have to pay anything. And if you have the financial documents from whatever business that is, presumably they want to sell, you can dissect that and basically come back and say, here's what the payment would be per month. Does the business currently support this payment? If not, they're asking for too much, right?
What if the stuff's in a shoebox?
That's the quality of financials, and that also can tell you a little bit about what's going on, right? We see that in my career. I see that on the beaches a lot with folks who purchased, a motel in 1974, and they keep their records. Maybe there's 2 sets of books. I don't know what's going on.
Yes, yeah, that's super common. Yeah,
they're usually being advised correctly on the price of the property, but not on the debt service of the property. Basically, what's the cash flow support as far as a price?
Well, yeah, I guess do you find that because of the cash to carry and sort of like the rate that someone's going to have to basically finance to be able to acquire that, it's such a different paradigm because they've owned it for such a long time? Or
Well, no, like I actually did see this fairly recently where the asking price was probably where it should be, but the rents were all below market value, right? And so to come to, a bank would still potentially look at that deal. It's just, there's going to be a lot more down payment required because the debt that can be supported at a healthy level is not anywhere near just like a 20% or 25% down, right? Often I get asked, what percent down? And it's like, I'm not even going to answer that because you've got to get into the books, right? It's not, a bank's going to do that for you, but you've got to really understand what that property is performing or that business in your first example. Because you see that a lot. You see people say, I think my business is worth X, but if they've been expensing a lot of things because they don't want to pay taxes, which that's, God bless America, that's your choice, but that is a choice. And so, you're not going to get as much back. I usually tell people, if you're thinking about making a move, talk to your banker, your attorney, and a CPA. They might give you 3 different answers, but they're not all incorrect. They're from 3 different perspectives. And then you have to figure out what's your play, right? Based on wherever your plans are and what you want to do. And I would say, going back to what you were saying, relationship with the underwriters, I mean, that's a big difference. If you can walk down the hall and talk to your underwriters in a particular deal, oh my gosh, like I think, and in the commercial world, a lot of times bankers will promote terms that have not been approved, right? So every bank is different. There's different levels of approval. What human being do you have to get to approve that loan? And, how real are those terms, right? Because what banks will sometimes do is they'll try and get you to stop talking to other banks by putting out really nice, shiny objects. But then later on, those do not materialize in the shape that you were being told. And sometimes buyers can have money on the line because of that.
Yeah. And so, like, are you referring to like a term sheet?
Yes.
Like, so how, if you're that person trying to make an acquisition and you're basing it on something that's being told to you, if you're issued an official term sheet, which maybe we should explain what a term sheet is. Do you want to explain that to our audience?
Term sheet is basically a list of how a loan is going to look, feel, and taste, right? It's here's how long the loan's going to go. Here's how much it's going to cost you. Here's the underwriting standards that we're using. Here's the financial documents you're going to have to surrender every year to us so that we understand the loan is performing as agreed. It's like a prospective loan, basically. But it depends on the bank. And I think, the question you ask is, who's seen this? Right?
How would you know?
Who approved this? They would answer, presumably honesty, right? They would say, this has been to the final person who's going to sign this deal. They've seen the financials.
Is there a signature on these term sheets? Like, Joe Schmeckenclip signed off on this term sheet?
It's usually the lender, the specific commercial lender you're working with. Okay. But I think just by asking, how much confidence do you have in this, right? Like, that's where, going back to a commercial community bank, typically they know what deals get approved and what do not. And so you're working with an experienced lender who, knows what's going to fly and what's not, both on the pricing and on all the other stuff that, like I said, I think we're taught as Americans for one reason. We were talking earlier about not having a lot of, personal finance courses available. I don't know whether that's by design or not, but, most people look at just the interest rate, and there's so many more factors that go on with the life of that loan than just that. I would see how real is this term sheet,
And speaking about a term sheet, that's something that we see very, very common in our world. Similar, like he had made a comment, term sheet. Who put together the term sheet? Can they deliver it? In our world, it's called. And this is something that's very, very prevalent in the mortgage lending world. So to kind of get it out there, lenders will use what's called a closing cost worksheet or an itemized fee worksheet. But the official offer should come over in the form of an official loan estimate. They all look the same. I could make a closing cost worksheet at 2%, 30-year fixed with no points and send it to them. because it's not legally binding. And right at the top, and every lender is required to have this language. This is not an official loan estimate. This is just your rate and fees could change. Please make sure you get an official loan estimate before making a decision. And so we see that all the time. I have loan officers that come to me, they're like, Chris, they're getting this rate, 5.5% with no points. And I said, let me guess, it's a closing cost worksheet. And of course we get it. And so it just could be one of those, unscrupulous actors out there in the world
That's horrible.
Yeah, no, and we see it a lot. I mean, it's usually not that, egregious, but we do see lenders use that to entice them to come. And then when they, they're too far into the transaction, they get a locked loan estimate. It's different. But it is ironic how when I sometimes will even quote on the phone to a client, I'm like, well, let me guess, it says at the top, please, this is not an official loan estimate. Please, your rate and fees will change. And they're looking at it and they're like, oh yeah, you're right. And then, I'm like, is that the kind of, outfit you want to do business with? But he made a great point that, there's, who you do business with and your credibility and, are they gonna, my reputation's worth more than one loan. To me, every loan I write is, it's a family, it's their house. And so we want them to walk away feeling good about it. And as you mentioned earlier, being able to refer and, trust that who they're doing business with is someone that that's going to lead them down the right path.
Yeah, I totally agree with that. I'd say probably in the last year to 2 years, we have said to people much like this, this isn't the best time for you right now. Don't sell this property. You're gonna take a hit on that. Just keep it if you can. And a lot of people thankfully can. But it goes back to, integrity of what you're doing and what you're proposing. It's not about a deal for us. It's about that relationship. And are we giving you ethical advice as opposed to let's just make a deal happen? I could use an example today. I don't know if you guys are seeing this in what you're doing, but very commonly, we have aspirational pricing that sellers are, you're laughing.
I love that phrase. Aspiration. You should trademark that.
They're still trying to sell their houses at COVID prices.
Yes. Yeah. Well, I say it's aspirational.
That's good. I like that.
Yeah. So, they're reaching for just a level that's just not existing. And so I had a client on the phone today talking about this, and they wanted to list the property. Just to give you an example, at a level that would be $811 a square foot. Okay. Well, I said, let's look at all the market sort of like surrounding you, and let's just figure out what this number really should be, because I don't think it's going to be where that's going to be. So we look at the numbers, and the number really that's probably the highest achievable based on what we looked at as sort of like the market dynamics around there is about $611 per square foot. It's a $200 delta, right? And it's a large house. It's about 3,000 square feet. So that's going to add up to a very large number. And I said, look, just don't. Just keep it. If you need that number or you want that number, and most people will have this statement, I don't need to sell. You hear that lately? I don't need to sell. I'd like to, but I don't need to. So, I just put that out there because it's a weird time. I've never had to say, no, this is not a good time so many times in the past couple of years.
Well, that'll leave a lasting impression on that client, because you're telling them, here's where the market is. And that's a customer that they'll come back because you're honest with them. You say, okay, let's just see what we can get and see if we can sell it at, we'll list it at 811, and maybe worst case, we'll just drop the purchase price, but you were honest with them.
Yeah.
That's key.
Somebody gets there. Yeah, I hope so. People get their house ready and they really want to sell it. And that's the thing is, going back to education and integrity and like experience, there's certainly people that are going to tell them something that would make sense to them. They want the listing. Let's get it. Let's have it. We're not about that. We're about making a transaction happen. And so I don't know what you guys are seeing, but I don't know if you're saying, no, don't do this. It's not a good time. Maybe the affordability is not there. People are stretched out. We were talking about credit earlier. So what are you seeing?
Well, I think Leisa, what you're talking about is reality. And I like reality. I don't know about you guys, but I like to know reality very quickly. Mm-hmm. And some people are afraid of that, or they have dreams or pressures or things like that. that is coming up against that reality. And so, I think the approach that you're taking is great, which is share with people what is possible and what is not. And sometimes waiting is the right direction. I mean, the great thing about, I think, both my industry and your industry is we don't actually collect a fee until the transaction is complete.
We can spend a lot of money and time trying to get there. Yeah. Yeah.
So, it's in our best interest to get the deal done. And if we know what the reality is and how it's going to get done, you're going to get that. I say a statement. I know I'm a banker and all this stuff. But if a bank is asking for something, it's in your best interest, because the only outcome that a bank wants is for you to be successful, to repay your loan, and then to do more. Right? We're not in the property management business, right? I love when people come in there, oh, well, it'll be 50% loan to cost. It's like, but we still need to get repaid. Right?
Yeah.
Like, you're in the property management business, not me. And so, I think people, and for whatever reason right now, some people are afraid of reality, and they want to keep up that fantasy. But I mean, look, the topic here is the dynamic economy. I mean, Tampa is a really dynamic economy. This whole area, we're still number one for inflation in the United States of America, the biggest economy out there. It's still here. And so I'm seeing that too. I have clients who are actively looking at properties, and they're like, for just an office, for like a wealth management firm or a law firm. And they're asking prices that have never been achieved, even during COVID.
Yeah. So you see it too.
So in that dynamic economy, stuff like that happens, right? Where people just have the belief in their own reality. And,
Can we just talk about that for 1 second? I'm dying to know this, okay? And I bet you're going to know this because you're a St. Pete guy.
Very much. I'm leaving St. Pete feet first. So hopefully
you heard it right here. Okay, so we got Tampa versus St. Pete. All right, we just acknowledge that. We got you guys against us. We know who's going to win.
Look at the condo we're sitting in. You guys already one move before we started.
Yeah. Okay, so let's just take a little survey right now. All right, rents, commercial rent, downtown St. Pete, marquee, sort of like rent base, A level, retail walk up, restaurants, valuation. I've heard it's nuts, crazy, cuckoo. What are you seeing? Have you written any of that stuff lately?
Yeah, it can be, because oftentimes when you get an appraisal, which once again, that's a bank saying, what is a reality of leases that are in place in the area? How far off from reality are we? Making our assumptions on what you can fetch for this property. Yeah, it is crazy, but I think it goes back to there's not a lot of space available, especially in the premium avenues downtown. I will tell you this, because I'm also a realist and I love St. Pete, but I have been somewhat disturbed at the number of restaurants I've seen
Me too.
shutting their doors recently.
Me too.
And that is obviously usually an early sign of turbulence ahead. So, it's difficult to say. I know that's not probably the direct
he's
answer
he's giving me a banker answer.
It depends. That's like my favorite phrase. It depends.
Well, okay, let me put a little bit closer. What's the average rent, if you could disclose it, that you're seeing trade right now or trying to be traded for a really nice restaurant space or marquee retail in downtown and in a good street, Central, First, Beach?
So the great thing about working at the Bank of Tampa is that we're not very large on the restaurant industry, so I don't have a lot of recent examples. I will tell you, I did some financing for a restaurant downtown some years ago, and it was really challenging because the appraisal that was looking at the space and finding comps was exceptionally difficult because it's Beach Drive, and at that time, not a lot of property had changed hands in many years, and so they're just, what do you compare Beach Drive to? Right. Like it's very difficult. And so you do have challenges like that. And I think, from a banking scenario, that's where having the local relationships with the underwriter, with the person who authorized the deal, that's where you make those arguments. Yes, I know we couldn't get the the similar comps, but here's why we think we're better than what the
Yeah,
appraiser went
local
down.
market knowledge.
Yeah,
Mhm.
local market knowledge. Where are the underwriters? I always ask that question. If they're in Missouri, they probably don't know what's going on at Beach Drive.
No, probably not. And they probably don't know what insurances are required here. If they're also Missouri or in Oklahoma, I've had many bust ups happen with lenders that are elsewhere on the residential side. They don't understand flood. They don't understand all kinds of things that we have here. So I agree with you on that front. All right, so you dodged the question.
I did.
Okay.
It's easy for me to dodge it because I don't know a whole lot about commercial
But-
rents. I do know our building in Tampa that where we have an office
Yeah.
is fully occupied.
Fully occupied.
Yeah, and we're not down. We're not A. I would say we're what, B minus maybe. We're just northwest of the airport
Mm-hmm.
on Eisenhower, so it's like maybe even a B building.
Mm-hmm.
But there, I think my friend just rented a small space there at 27 a square foot.
Mm-hmm. Yes, I mean, I think about, Tampa, St. Pete. You guys have more office space in Tampa. We don't have as much, but we have a lot more fun over here. But the restaurants closing is a big deal, right?
Yeah.
So Tampa's it might go ahead of
Right.
St. Pete, right? It could
Well, if
happen.
you go to
It already
McDenton's on a
is.
Friday night, if you're 22 years old, you might have a lot of fun. But I'm not that age group. Howard Ave.
Oh, come on now. There's a lot more to do than McDenton's, right? I mean, yeah.
I work for the Bank of Tampa, which originated in Tampa, but we're all over the market. Tampa, I joke with friends, is winning the Food Olympics right now.
Mhm.
Yeah,
I mean, they have
Yeah.
got the Michelin star stuff. Now we have with the Vinoy and what they're doing over there. I know they've got very high expectations for the quality of service.
We
there.
have to get it together. I mean, we got to win this championship here because
good luck.
we've got
We
the
got a long ways
Waldorf
to
coming. I
go.
mean, like the elevation's going to get high, right? So
I want to know who's buying all those condos on Bayshore. They put up 2 Ritz-Carlton towers. They're
Mhm.
doing another one right there at the foot of the Platte Street Bridge. Where are these people coming from?
Well,
I actually will comment on that, and
Go
I will
ahead.
give a plug to another real estate organization, Smith and Associates.
Mhm.
I had the same question because I was always thinking, okay, it's this, and they told me it's locals.
mhm.
Mhm.
So banks, when they do a construction financing, require a certain percent, say
Mm-hmm.
40 or 50%. And I just assumed it was people from out of state who were buying these up. Generally, it's people, say like in this condo, who want to buy at the Waldorf. They will go under contract. The
Mhm.
locals will. They have to put 10%, 20% down. And that gets the sales volume high enough for the financing to happen.
Yep.
The financing happens, and then that is when the people from out of town come in because they need to move in immediately.
Mhm.
And I think that's super cool on both sides of the bay because it means that it's the local economy which is actually allowing these buildings to get financed. Then all the people from out of state come into. But I did not know how that worked.
Yeah.
Nor did I.
Yeah, it's
Yeah.
fascinating.
Yeah, I agree with that. And then the other thing that I see is that you have a lot of the aging demographic that is selling off their businesses. And the businesses are at the point where they've sold, they have a cash sort of like basis that they can now go and acquire their retirement, sort of like golden parachute out. And so they come and they acquire a property. The locals, I definitely see that where they basically buy and they'll hedge on an increase in equity in that build time, right? So if you put 30% in and you've got hedging of that bet between 2 to 3 years for build time, you can, it's not a bad return typically.
We're also entering into, I read an article in the New York Times, it's the largest transfer of wealth in the history of the United States is coming from the baby boomers.
Yeah, because they saved all that money.
Yep.
Yeah.
We're talking trillions and trillions.
Mhm.
And Americans are sitting on more equity than they've ever had in
Right.
the history of the United States as well. And more credit card debt. We were talking about that a little bit earlier.
Yeah, it's kind of it's this tale of two situations, right?
Do you see people downsizing? I mean, I hear about that a lot. The empty nesters downsizing locally. Do you see that?
Not as much. Not as much as we once did. And I have a philosophy. I don't know if it's right. So let's just take an example. You have a larger home. You've lived in it for some time. You've built equity in it. Maybe you've paid your mortgage down. You had a pretty good rate. Maybe you don't even owe any money on it. And so you're like, okay, well, I guess we want to downsize. Then they come to look to buy something that's downsized size, or they come into a condo environment where they want no maintenance. And they're like, that doesn't feel that good. And so I think that they question that more than they ever have because the pricing is high. And so that downsizing doesn't feel like a downsized price. It feels like an upsized price, but a downscale closet situation. If you know what I mean, like if you've lived in a home, you have a closet that's large and it has a lot of things and you can store things and you've got Christmas and you've got all the holiday stuff and you're thinking, oh my gosh, well, I could get to a smaller space, but I'm going to pay a lot more to do it. And I don't know. I just think people are really hedging on that a lot. I don't know. It's a curious time. I used to see it a lot more than I see it now. So it's a good question.
I've got a random question.
Yeah.
And I want to hear from all of you on this, but another big news headline is the potential removal of property tax here in Florida. What do you think are the chances of that even happening? I mean, obviously it'd be great for all of us, but there's got to be some consequence to that too, I would imagine. I'd just like to hear everybody's input on that.
Well, I think it would be amazing. I mean, I think it would be amazing. Whether it's going to happen or not, I have no idea. But there's been a lot of things that I didn't think were going to happen that have happened. So I don't know. So it's a very interesting question. I don't know the answer to. But I think
Fair
it's
enough.
feasible. I don't know. What do you guys think?
I mean, I'm kind of indifferent. I mean, the revenue would have to be replaced somehow, and you wouldn't want to see a reduction in services, police, fire, education, trash, recycling, all the stuff that money pays for. But it'd be great if nothing dropped off and get rid of our.
It's got to be impossible.
But it's got to be sales tax increase.
It'll come from somewhere, right? Yeah, it will be replaced, but I don't know where it would come from. But
I try not to talk politics these days. I heavens knows what Tallahassee will do or can do. I actually had this is a real conversation I had with my best friend's father. I was visiting him and he told me he lives on the other side of the state. He pays $900 a year in property taxes. And he was all about this, he's owned this home since like 1994. His income was like 44 grand on Social Security. And he goes, I can't wait for this to happen. And I started on the back of a napkin kind of, personal finance, right? So he pays $900 now. The assumption is there would be like a 7% additional sales tax. It would go from like 7 to 14.
wow.
So 14% of 44,000, assuming he spends all of his money, is 2,900.
Wow.
So he would actually be paying $2,000 more per year.
That's great math.
And
That's great that you did that.
I must know a banker, but the thing is,
Yeah.
I think what that proofs up is that there are a lot of people that, probably not a good word to use, but subsidized, who have been in their homes for many years that are homesteaded. And then there's new people who I think would reap the benefits of that trade.
Oh,
Say
yeah.
nothing about whether it's good or bad, just like the personal finance war, who wins,
Right.
who pays more.
I was unaware that.
Yeah.
I didn't find out until I received my commercial rent space in Tampa, but the sales tax, for my rent, it was $900 less. The rent went from, whatever.
Well, yeah, that's coming down. Yeah, as of
Well, I
October.
got my October 1st rent check and rent bill, and I scanned it, emailed it to CMG Leases.
Yeah.
It said, make sure you don't send them the bigger number this
Yes.
time.
Yeah, everyone's getting a
We
break.
Googled it, and you probably know a little bit more about that because you're more in the commercial space than I am, but I guess they passed a bill to eliminate sales tax on commercial rents.
It's very curious.
Yeah, they were reducing it for many years, and then they just went ahead because the state's done so well with property tax revenue coming in, et cetera. So, that was a tax relief that happened. But yeah, I think people would be surprised who would benefit from that. I would benefit. I've been in my house for 2.5 years, so we would take a hit, a plus on that. Not that I want that to happen, but
Right.
Yeah.
So we got to start wrapping it up. But I can't sit like this much longer, and I was told I had to for the camera. But anyway, so one last question. You all three work in different businesses, but all cohesively work together, which is great. So question I have is, if you could have a crystal ball in front of you, which Lisa always says, I don't have a crystal ball, but imagine you pulled out your crystal ball right now. What do you see in your business the next 6 to 12 months looking like? And we'll start with you, Chris.
Okay. This is great because I try and get this word out as much as possible. I believe that COVID gave consumers and Americans a distorted view of what a good rate is. I remember my dad bought a house in 1981. His rate was 18%. Probably the highest rates have ever been in COVID, the lowest they've ever been. And we've seen a reduction in transactions. People, first-time home buyers aren't going into the market because they feel that rates are high. People that maybe bought a 2-bedroom, 1-bath townhouse, now they have 2 kids. They want to upsize into a bigger house, but they refinanced into a 3% rate, so they're not making that move. Now their equity's doubled, but there's rates are too high, and baby boomers, not baby boomers, empty nesters that maybe want to downsize into a smaller house. They've got a big house, all their kids are gone, but they're not downsizing because of where rates are. So I read another article in the New York Times said when rates hit 5.5, that's finally going to be the trigger point where consumers will be, okay, well, hey, it's not 7.5, but at least it's 5.5. Let's sell our house and get a bigger house, or let's downsize into a smaller house, or we need to get into the, we've been a first-time home buyer waiting. And so I think when that happens, we're going to see, today's a buyer's market. From my perspective, where I'm at, we see price drops longer. Properties are staying on the market longer. The majority of transactions I participate in, we're representing the buyer. There's seller concessions, so sellers are dropping their asking price or paying for sellers on buyers' closing costs. So I think the biggest message I can get out there is that when rates drop, you're going to be back into a bidding war. And it might not get as crazy as it was during COVID, but you're still going to have house appreciation, but the property value that you're going to pay for it is going to make your payment higher than if you were to buy today and then refinance when rates drop. So that's my public service announcement. Buy before rates drop, because it's going to be back to a seller's market.
Great. Awesome. Barclay, what about you?
Crystal ball. That affects my profession.
Yes.
AI, it's got to be. I just do not know how AI is going to impact banking. I think a lot of banking jobs are probably safe. I think underwriting and things where you're just crunching numbers are probably, that's probably going to be a tough field to be in. You're probably going to have human beings supervising a lot of automated outcomes by AI that help speed up the process. What happens to appraisers with AI? I think if you look at what Neptune Flood Insurance, which is, a bank I used to be at, the former CEO, Trevor Burgess, local, he has become, I think it's like 5% of the nationwide flood insurance market, like a St. Pete company out of nowhere. And he took, it sounds like almost no losses with the hurricanes. And he's going to an IPO this year, going public. And it's because he utilizes AI when he's looking at the individual house, as opposed to, the swath of the area. And then we all know water comes into our neighborhoods in interesting ways and not always the way you think. So I think there's a lot of the financial industries are going to really be impacted by AI. Some jobs will be lost, but I think a lot of people will be safe, ironically. So
awesome. Yeah, that's great insight. Lisa, what about the real estate market? What do you see happening in the next 6 to 12 months?
I'm very optimistic. I think that the market is ripe for a transition point. We've been on the precipice of that, I think, for a while. And I'm very optimistic about what things are coming our way. I agree with you 100%. I've already seen multiple offer situations. I have seen people paying over asking. I have written offers where we waived appraisals because they wanted it that bad. So I think we're going to see a comeback. I really feel like if you are in the mode of buying, or you're thinking about buying, how long can you live in a house that you hate?
Right. Not long.
And there's a lot of people out there.
Interest.
Right. Yeah. Yeah. So, I think life can be short, and I think people you can only kind of live in that scenario for such, a time. And I feel like we're going to go back into a really thriving sort of situation as soon as we can get to a rate level that makes some sense. And I don't know what that number is, but I feel like we're approaching it. So I think we'll
be there sometime early to mid next year.
Yeah, I would agree. Springish.
Yep.
Yeah. So if it were me, I'd buy now. I already did that because I knew what was going to come. So I eat my own cooking on that front. So, but anyway.
That's awesome. Well, thank you guys all for joining us. Thank you guys for coming on the show today. We really appreciate it. Yeah, it was fantastic to have you guys. A lot of great knowledge we got here. So thank you so much. We'll put the contact info and links in the description of this video, and we'll see you guys in the next one.